is 1 CPE credit to qualify as CPE credit. Please actively respond to polling questions that we're going to put up during the duration of the broadcast. Let us know if you have any technical difficulties. You can email elevate@armaninollp.com with name and date of the session along with your poll responses. Questions or comments? I'll be monitoring the chat line, so if you have any questions as it comes up, feel free to just drop it in the chat for us. I've had the pleasure of meeting everybody on this call. I'm very, very excited to be hosting this. Just quick intro, but we'll let everybody give a little bit more detailed intro. Anthony Palma, Principal Griffin Gaming Partners. Me and Anthony have, I think, definitely one thing in common. We're Zelda fans, top #1 game, right? That's my #1 game, so that's very cool. In hand, I've listened to her speak on a number of occasions. Great speaker, CEO of Super League Gaming. Can't wait to hear what she has to share as far as M&A side and what they're doing. Michael Metzger, partner at Great Star Partners on the investment banking side. So we're really excited to have everybody on. And then your host for today, Ricardo. He is the partner and practice leader for our video game industry. And I will kick it over to Ricardo now.
All right. Thanks, Matt. Appreciate it. And thanks again for all the speakers who have agreed to kind of participate in the this webinar. Really excited to host this and kind of get into some interesting topics. Let's start off with kind of an easy one, just kind of a state of the industry question for everybody. I'll start with Anthony, then go to Michael, and then we'll finish with Ann. But what trends did you guys see in 2021? And then where do you kind of see the gaming industry going in 2022 and beyond?
Yeah, thanks for having us, by the way. Very excited to be here. So I think by far the biggest trend that we've seen in 2021 is the emergence of blockchain gaming. It's been around as a technology for a few years, and crypto obviously has been around a good bit longer, and people have been trying to figure out what to do with it in gaming, but it's made its mark, and very much so in 2021. As a venture capital firm, I'd say over half of our deal flow now has some sort of blockchain element in it. And it feels like that same fundamental shift in business model that we saw from premium to free to play maybe about 10 years ago. So that feels like by far the biggest trend, and that'll affect business model, game design, game development moving forward, as well as the future. We continue to see lots of companies using the word metaverse as well. I think there's another separate hour-long conversation about what a metaverse might be. So I won't get into that, but I think those are probably the two biggest trends that we're seeing and where we'll see a lot of continued focus moving forward.
Thanks, appreciate it. Michael, what do you see?
Well, so putting more of like investment banking lens on, so this year has been a year of massive consolidation within the gaming industry. So just the first 3 quarters for the year, we saw a deal value of over 71 billion and around 750 deals, which is way more than double what we saw last year. It was about 31 billion in M&A and 9 billion in private financings. And what's also super exciting is financing for private gaming companies increased significantly and also reached a peak in the last quarter. That's amazing, because those are the companies that, you know, got to get sold or go public at some point in time. And on the investment side, besides the NFT space, also see that much more money and focus is going into the PC console space versus previously it was much more mobile focused. And what's also exciting related to the funding is a lot of new kind of gaming focused funds emerge or had their follow-up funds, whether it's obviously Griffin here, Galaxy, Bitcraft, Makers, OneUp. So a lot of new funds that really are going to build the billion-dollar companies in the hopefully near future.
Good. And how about you?
Yeah, I mean, the trends that we talk about the most is obviously the metaverse, as Anthony mentioned. We've been talking about it, though, for a year, right? So this isn't just a fad since Facebook's renaming. And it's really because we've been in the metaverse with our own owned and operated properties for now about 5 years. And so for us, it's been about the ways that we think about the metaverse and then the monetization of it. And so both the emerging ad tech inside the metaverse. So that's a big piece of how we monetize. And then also crypto becomes interesting because of the different ways that we can create commerce as well between our players and viewers in the metaverse as well. So, you know, looking at things like play to earn and other ways that we can deepen the engagement that we have as we build in the metaverse. We service about 5 million Minecraft players a month in our owned and operated. And currently our ad tech reaches about 60 million Roblox players a month, which is about 30% of the reach.
That's interesting. So let's stick with that while we, I know a bunch of you guys actually talked about the metaverse. There is a lot of hype around here, right? That's kind of the key buzzword, it seems, over the past, 4, 5, 6 months, and obviously culminated with Facebook's change in name, company name. Where do you kind of see that going? I know you touched a little bit about the monetization of it. Where do you kind of see that going? How would companies monetize the metaverse, and how do they take advantage of it? And what sort of companies do you see kind of playing in the metaverse? Are there certain companies that are included versus excluded? What are your thoughts there?
I mean, I'll jump in, because we're working with a lot of different brands and advertisers about ways to create persistent metaverses. Now, when I'm talking about metaverse, I'm talking about specific ones around gameplay. So I think when you listen to Zuckerberg talk, he's imagining a world where all these mega platforms are now open and interconnected, and you're hopping between your Apple universe and your Google universe and your Microsoft. I'm not biting off that one. That's a very ambitious, thing. But what we are finding, I mean, that just got announced that Ralph Lauren is creating a Roblox universe, right? You've seen Gucci and lots of luxury brands do it. And it's nice in a way. I used to be the CMO of a large cap company. And, what I'd love to tell my old CMO self is like, social media 10 years ago was like the next horizon, right, for a brand to reach new audiences and create brand affinity. And I don't think that brands should be thinking about a metaverse as a campaign tool. I think it's really about the question of like, what is the persistent way your brand's going to exist there? And I think so many times old school marketers think about it cannibalizing their traditional business model and not understanding that it's actually reaching new audiences and growing your brand reach. So it's fun now to see that, because I don't think it excludes any types of brands. It's not just for the endemics, and it's not just for brands that completely line up exactly with that current gaming demo. I don't think Roblox users are Ralph Lauren buyers, right? So I love the contrast of examples like that to really open the eyes of brands about why they need to be thinking differently. Because the reality is this: a Gen Z person doesn't sit and say, well, I have my digital world and I have my physical world.
Right.
What they say is I have my life.
Mm-hmm.
And so that's the way that we talk to brands about it.
Right. Interesting. Michael, what are your thoughts there on the metaverse and the hype around it?
Well, if I hear metaverse, I first think Ready Player One. That's where actually you live somewhere else, essentially. And so I think we're still quite a bit away from that. But that's kind of, what I envision the metaverse to be. And maybe in 10 years, we're there. Exciting things, what I'm seeing now is like what Sandbox is doing. On the crypto side, where people, similar to Roblox, buy land and create avatars, interact with others. That's interesting. And another thing to me, which kind of is a metaverse, is what Niantic is doing, more of a real world metaverse, where you maybe have your AR, your phone, you're walking around in the street, and you meet somebody else. You might meet his avatar on your AR. You're walking by a store. The store might advertise whatever they have, or might even know what you like, and you could potentially do a virtual purchase or go in. So that's, to me, is another kind of metaverse that's very interesting.
Anthony, what about you? What are your thoughts?
Yeah, I think we're taking a relatively measured approach from our side, just because we agree with Michael, the vision of a Ready Player One virtual world, essentially where we all live and hang out, is a ways off at best, I think. And so what we're seeing is a bunch of smaller metaverse style plays pop up, and we think about it more in terms of where your digital identity is stored and exists, and what you can do with it in particular. So if you think about it as digital identity, anything from spending time in Roblox or Minecraft or any game where you're spending time with friends can apply, but also technically your Apple ID is part of the metaverse, because it's your digital identity that comes with you from your phone to your TV to your laptop. And so there's just a bunch of different ways to think about how digital identity will be applied to places where people are spending time. And for us, I think we're trying to figure out where people are going to look to spend time. One of the biggest questions that we ask when we look at folks that are pitching us metaverse, and believe me, that buzzword is in probably one of every two pitches that we hear at this point, and blockchain's in the other one, if they're not in the same one. So a lot of overlap there. But the main question that we ask when people pitch us that they're going to be the next metaverse people are going to spend time is why? Why would players or users want to spend time in this particular space that you're building? And what's the reason that they're going to want to be? What's the motivation to be there? And so I think that's one of the things that's yet to be seen outside of gaming. Gaming's been the most obvious use case for spending social time together thus far, but we're interested to see where it goes.
Yeah, interesting. I'm going to turn it over to Matt real quick to do kind of our quick CPE questions, if we can get those going. Get a couple of those out there.
First one should pop up here. Oh, drop digit. There we go. So your first one should be up there now. Choose which channels you use to get gaming information from.
While you guys are answering, I just got to point out, Anthony, I love the game in the background. I got to know what that is. That looks like a nice little distraction during the day. You got a little Pac-Man there, I saw.
Yeah, if I could do a little plug for this company, we're big fans of them. It's called II Arcade. It's a really well-built machine. I think it won like IGN's Arcade of the Year. We were talking to them recently and got to demo a couple of units, and very exciting piece of equipment. We're starting to see online connected arcade machines, which is super cool for us retro folks.
Sounds like a good holiday gift for anybody still looking for something.
Pretty sure there's a big discount right now as well. And I swear I don't work for them. I'm just a big fan. So
all right. What else we got there?
Reddit was a big one.
Okay.
GamesBeat, Gamasutra, VentureBeat, another business pulling it second. Discord, Telegram to a lesser extent. Cool. And we got another one in there, Rob. Currently seeking funding. Are you seeking funding for your gaming company? I was wondering too, just because I saw that I think Axie Infinity just dropped some of their play to earn features, but I was wondering, do you think that right now the play to earn is just the way to get everybody into the game, and do you think that they're going to pull a little bit more of that as some of these companies scale?
I think I can hop in. I mean, I think what we're seeing is just the earliest iterations of what play to earn could be and could mean. I think there's going to be a lot of growing pains in trying to figure out how to properly build an economy that's sustainable long term, that can actually reward players and then encourages them to spend those rewards in games so that there's a constant flow of tokens going out to new users. I think we'll continue to see different iterations of it for the next couple of years before the industry starts to settle on kind of the accepted models, just like rewarded video ad became kind of the go-to for mobile advertising as an ideal way to reward players, and then in-app purchases of certain kinds just to kind of enhance the experience. I think we'll see similar evolution of that model over time, and so I wouldn't put too much stock personally into what we're seeing today. I think it's just the first iterations, and kudos to them for being able to come to market with such strong innovations in business model, kind of fundamentally transforming the way that we're thinking about rewarding and engaging players.
Agree.
All right.
All right, most people are seeking funding, so.
Just good to know. Always good.
And we've got 2 more here. Company stage. What stage is your company currently in? Startup, growth stage, looking for an exit, public filer. We got 1 more here, Rob, right? Okay. All right, 40% startup, 47% growth stage, 13% public filer. No SPACs, IPOs, or M&A.
Yeah.
Yeah, I was gonna
Not
say,
yet. Not
isn't
yet.
everybody in the third bucket
Right.
for the
Seems
right
like it.
price?
Yeah, exactly.
All right, and then the last one here, 2022 global gaming economy. What are your expectations for the global gaming economy in 2022? Larger than 2021, about the same as 2021, less than 2021. See, Rob, I wish I could vote on this. Yeah, it's interesting. Another one I've been following is Big Time Studios, but it seems like they're not going to necessarily roll out a crypto along with theirs. It sounds like it's going to be all in-game, really, about the player community, which is kind of an interesting take. So,
Yeah. Sentiment I think we'd all kind of agree on, right? It just the gaming industry globally just continues to, exceed expectations every year, it seems.
Yeah, I think too, it's just, I mean, I always used to say this in the early days when we were a little more focused on esports, it's so much of it is just the definition, the edges haven't even been defined. I mean, that's the thing is that, just inside the self-produced world of metaverse-based gaming, the revenue streams for, as we're talking about, crypto for advertising, it's all getting redefined. And so I think one of the hardest things is how do you even put a box around what you define anymore as the digital world? It's not just about gaming. I mean, the majority of our players are there just as much for the community and for the self-expression. So is that gaming? I mean, we think it is because you're using a game as your mechanism into that world. But I think that's always been the hardest part is how to even draw a box around it.
Right. The lines are really blurred, I think, between a lot of different industries, right? And the overlap into the gaming space just seems to be kind of the platform and the mechanism with which to kind of do that, right? So
it's all entertainment. And
Yep. So Ann, let's stick with you on this next question, because you kind of alluded to this, but diversification seems to be really important for a company. You kind of, you mentioned it just right there where you said, look, we kind of started off in your infancy as an esports game, right? And now you've really morphed and changed into something so much more. So, what recommendations do you have to kind of continue to evaluate a company and its core business model and how that might need to change and diversify as it grows and evolves?
Yeah, I mean, the hardest thing is scaling. And if you don't have a technology moat, then you need, or if you have a monetization model like ours that's mostly built around an ad model, it doesn't work without critical mass. And so I look back and, it's humbling, right? When we were 12 people or 20 people sitting in an office in Santa Monica trying to run esports experiences, I mean, I was pounding my head on the table. So, we did something a little differently, but I think it was good for us. We went public early. We had only ever raised common stock. we were at a point where our backs were kind of up against the wall to some extent. Either we were going to have to bring in preferred money and squash a lot of the investors we had, which were some pretty notable high net worth professional sports team owners, like owners of the Dodgers and the Warriors and the Tampa Bay Lightning. We had strategics like Logitech and Viacom investing in the company. We knew it was a little risky because NASDAQ today is so built around the unicorn model, but we kind of looked just like we were the common stock crusaders, so to speak. We kind of decided to kind of go back to the old days of NASDAQ when companies like Amazon went public and just kind of make our stock available for the everyday investor and allow them to participate more in some of that upside. The nice thing is it was a really healthy reset button for the company. It was psychologically great to say whatever code we wrote, whatever we were working on, and whatever the world thought that Super League was for the 3 years prior, were people running events in movie theaters, we can close a chapter on that. Like, this is a new day. And we were able to really look at where were we getting traction. What is the sun of our universe today? We've always been focused on the middle of the pyramid, right? On those up and coming players, gaming enthusiasts, streamers, and we have about 1 million creators on our platform. So they're either creating Roblox games or Minecraft games. Again, to Anthony's earlier point, we're not trying to start our own metaverse from scratch. We're leveraging metaverses where they already have traction and community. Or and in addition, we have about 400,000 gaming-centric streamers on our platform, sharing their gameplay content. And those streamers reach about 100 million US audience a month. And so that's the kind of heft and scale. If the sun in our universe is empowering that mid-tier player and creator, and that we have a thread of creator economy in that. But the way we make money is through a unique in-game and in-stream ad model that can't be ad blocked out. And that gives us an authentic way for brands to engage with these hard to reach audiences. And yeah, that repositioning, esports is a mechanism to aggregate creators and viewers and running tournaments and broadcasts, but it's just a tool in the toolbox, and it's not our reason for being.
Right. So I want to pick out something that you said and ask Anthony and Michael this question. You kind of alluded to, just the unicorn status and the valuations and all that type of stuff. For Anthony and Michael, we'll start with you, Michael. What are your thoughts on kind of current gaming valuations? Do you think in terms of how they're being valued, especially on the exit, kind of in your circumstances and what you're seeing? What are your thoughts on valuations of gaming companies?
Yeah, maybe briefly starting with, I guess, funding for private companies. So it's probably on the higher end, or definitely pretty frothy for the good companies where we see pretty high valuations. But in the end, for a lot of the VCs that are looking for a 50 or 100x return, it's just picking the right one. And even if you overpay a little bit when investment, in the end, it's going to be fine if you pick the right targets. That's kind of on a minority side. On the public side, valuations came down a lot. If you look at beginning of the year, looking where Zynga was trading, Activision, Playtika, others, a very significant drop between January and now. On the M&A side, it's valuation certainly went up, so they're very attractive. It has to do with kind of the buyer's universe expanded a lot, and while, let's say, a year or two, less companies were really very focused on M&A, this year has been a year where, for some of the targets where you get very aggressive bids from 10, 15 people very quickly, and then there's a little bidding war going. So that's great for people looking for an exit, and I don't see that slowing down anytime.
Yeah, and I think on the smaller side, on the private side, I should say, I agree with Michael. I think frothy is the exact term I would have used as well, for particularly around Series A valuations right now just seem to be pretty outsized. But if you find the right folks, it can definitely match up. I think the challenging mismatch that we're seeing in gaming is sometimes on the content side. There's been incredible teams that have raised at 100 million plus valuations without a product. And just looking at the market and thinking about how many content companies have exited for, even a 10x multiple on that valuation is low. And so, we are, Griffin's taking a relatively measured approach at Series A right now, just because of the frothiness at that side of things. But I think to Michael's point, if you can get into the right deals, even some of the blockchain deals that we're seeing that have incredible valuations, particularly on the token, we see what the token value could potentially become, and it's a relatively low risk opportunity, especially extremely low risk and actually going to zero. And so even though valuations are all over the place on the Web3 front at this point, we just kind of stick to our guns on quality of team, quality of content, and if we feel like it's the right fit, we're willing to pay up for that in particular.
Yeah, I will say, just adding from the public perspective, there was something nice and freeing as well about just letting the public market, even though microcap doesn't have a lot of fundamental investors, and so there's a supply demand imbalance that kind of makes your share price kind of nonsensical at times. You can beat all the estimates and your share price goes down. But there's also something freeing about saying that you can't control that, and to let the market establish that valuation and just get focused on execution. And the other thing I would say, we did 3 acquisitions this year. We couldn't have pulled those off without access to public capital. And so it has been a mechanism for us. We were able to pull in about $30 million off of a shelf in about, call it 5 hours one day when our stock took a run. And, without that, we wouldn't be able to be in the position we are. And so, there's positives and negatives to being public, but I certainly can say that it's helped us accelerate our strategy this year.
Yeah, so let's stick with that then. Let's talk a little bit about capitalization of companies and access to capital. And obviously, being a public company, that's one of the many positives about being public, right? Is you have the public markets to access the capital, and there's a lot of things that you can do. Let's start with you, and then we'll move kind of around the room to Anthony and Michael in terms of what recommendations do you have, or what did you guys do when you guys were private in terms of accessing capital, and where did you look? And just give us maybe a couple ideas there.
Well, my previous startup had been more of a classic Sandhill Road one. So I had a few VCs who owned the bulk of the company and were the board, and I raised preferred investment. I think one of the hard parts about that is you kind of wake up after a few rounds of fundraising and you realize that you've got a lot of employees who think because they're employee number 2 or 3 that their options are their retirement. And it only works if you get pretty significant exits. And so there's no doubt it was hard to raise this common stock model. When I got brought into Super League and told that, they wanted me to raise all common, I mean, it took longer. You take checks from everybody. The good news is you have a very distributed cap table, but it's just very different. But it was very much in the spirit of saying that we would be able then to decide if we wanted to go ahead and list and get access to the public markets. So it was by intention almost a complete opposite approach. Probably the hardest thing, raising money is easy now in a way, because if you don't like us the next day, you sell your stock, right? So there's no real due diligence. There's not all that courting and gaming. I do like it's more transparent. I'm not showing wild forecast models. I show you what my last quarter's audited financials were. And then I have to tell you where I think we can go, but there's no tap dancing of wild projections, which it's kind of nice to, after 10 years of the wild projections, it was kind of nice to let that go a bit and just talk about what is for the most part.
Okay. Anthony, let's go to you. Thoughts on capitalizing company and just access to capital. Where can companies go?
Yeah, absolutely. So I would definitely say strike while the iron's hot. This is a great market right now for raising. There's a significant amount of capital going out. VC firms are raising at an incredible pace. So this is a great time to be in the market. I would say gaming investors are actually becoming more plentiful and savvier at this point. So there's kind of an opportunity for gaming companies in particular to find investors with more strategic value specific to gaming than there may have been in previous years. So it's a great opportunity to not only find the capital that you need because the market is hot, but also to find investors that can provide very specific strategic value to your company, help you with BD, key hires, anything else you might need in the space. And so being able to pick those out of the lineup and avoid, what one of our partners calls tourist capital in gaming, just because the market's hot, and finding the right investors that will fit exactly what you want. This is the opportunity to do that.
Michael, what are your thoughts?
Yeah, I agree. The market is very hot, so I would definitely recommend if anybody's thinking about raising some money, doing it now and quickly. Versus VCs, depending on the stage of the company, it might make sense to also have discussions with strategics. Like Warner Music has been very, very active in a gaming space. Tencent, NetEase, ByteDance, also hyperactive, Tencent specifically. And there's several other strategics that could also add some value for other regions. So I definitely would consider that. And it's funny enough, I just talked to another friend. He was looking to do kind of a Series A for his company, and it had some blockchain element, and he just did an NFT drop and raised 6 million in like 16 hours, and free money, no dilution. So if you can do that, then that's probably the best and cheapest capital.
I have to give a plug right now to both Michael and to Anthony, who partners with Peter Levin, who's been one of my kind of original mentors when I came into gaming and has been an advisor to our company. And I mean, these are people who are really, seen in the industry as, being sages, in the sense that they understand intuitively gaming and gaming trends on such a deep level. And so when you have people who've had that kind of track record and network and deal flow, I can see exactly why, you guys are able to continue to attract excitement around your funds.
Mm-hmm. And Michael, it sounds like, what you kind of point out is something that I think is unique to the gaming industry, in the sense that you can be creative in terms of access to capital, right? Like you were just kind of describing with an NFT and just going out and generating some free cash, right? Without any real strings attached to it. I mean, that really is unique to the industry. Maybe talk a little bit about that and what your thoughts are there.
I mean, it's very unique. It's also very recent, and I'm not sure how long it will stay like that on the NFT side. But that's currently a great way to take advantage, and it's for gaming, but it's also kind of for a lot of other digital content, right? People have been very successful selling digital art or other digital products with an NFT attached and monetize that significantly. So it's broadly in the digital media world.
Yep. Matt, let's go to our next kind of CPE question there. I think that we have.
Yes. I want to pause the great conversation here, but all right, growth in companies being acquired. Are you seeing growth in gaming companies choosing to be acquired? Yes, like wildfire. Yes, but not more than usual, and no. I think there might be a right answer on this one. I'm just gonna put it out there.
Yeah.
Yes, like wow. 56%. Yes, like wildfire. 25%. So well over like 75% said yes. And we got
So
one more here, Rob. Oh, go ahead.
While we're doing that and getting that ready, is that kind of consistent with what you guys are seeing and experiencing? Obviously, and you're more on the acquiring side, right? But for Anthony and Michael as well, are you guys kind of seeing that as well in the increased uptick in M&A, or do you see it more as consistent? What are your guys' perspectives?
Yeah, I mean, as I mentioned earlier, this year has been an absolute record But the first half of 2021, we already exceeded the deal value and numbers of all of last year, 2020. So it's been a massive amount of activity, and I don't see it slowing down. And specifically with a lot of companies that did go public early in the year, they're all looking to kind of further feed the beast to some extent with those acquisitions. And those acquisitions often are highly accretive to the buyer. So it just makes sense. And what companies like Embracer have done, where they report, I think, 16 deals in 1 quarter, kind of crazy. So I don't see it slowing down. It's continue to be super active. And this has been also a record year for us. I mean, just on the gaming side, closed already 4 deals. And it's been phenomenal.
Yeah. Anthony, what do you see?
No arguments with what Michael said. We continue to see a bunch of different forms of this, whether it's direct acquisitions or roll-up strategies like Embracer. We've seen a couple of different companies looking to do things like that and kind of consolidate, I think, to Ant's point earlier, on the content side, which is exciting. We're seeing a little bit of a platform land rush over the last couple of years with the platforms getting back into the market to build out their own first-party studios, or I guess second-party. So it's very much what Michael said. It's been a record year.
Yeah. And
one thing I might add, just to kind of looping back a little bit to some of the earlier conversation, you've kind of now triggered, maybe it's PTSD, but some of my early memories with Super League. It was interesting when we were jumping in. We were certainly dragging off all the buzz about esports and the big money going into the teams. And I do remember these moments when you realize, like, well, that's a great idea, but the publisher's never going to let you do it. Or that's a great idea, but there's 5 other people doing it. It's going to quickly become commoditized, being a tournament operator, I mean, it was interesting that along the way, there were certain things that we realized more we didn't want to be, or that we didn't have a hope and a prayer of actually ever having a meaningful foothold in, just by our nature of our size and capability. And so it has been kind of an interesting journey to see, like, the companies that if we had been in a room with them 5 years ago, we would have been like, we're not worthy. We definitely would have felt like the little guy at the table, the Face-Its and BattleFi's. Not that they're not still great businesses, but, we felt definitely like the little guy. And now, like, our head of partnerships came from BattleFi and Sony. So it is kind of funny. Now we've changed and morphed our model as we've gone along the way, but there's still a lot of fragmentation out there. And it's surprising in some ways who's kind of alive still. I'm sure many people say that about Super League, and I don't blame them, because there were times where it was a head scratcher. We were scratching our own heads,
right.
And so, and I do think in the end, again, access to capital can change everything, right? And and also, if I would love to tell the person running the Sand Hill Road startup, I felt more brave and innovative and entrepreneurial being an executive and BP than I did in that last startup. And the reason is because I was so dilution obsessed, that I am so runway obsessed. I was afraid to spend 30 grand. Mm-hmm. And I also was afraid to really invest ahead of needing a great executive team. Mm-hmm. And that's been a really fun, different thing that I've gotten to experience this time, is having the team almost ahead of the growth. Because all of a sudden I don't feel so alone, but we're being a lot bolder. So I would go back and say to anybody who is in an early stage, see if you can get alignment from your board and investors around building out your management team ahead of your growth, and maybe kind of raising money when you don't need it more. I wish I had done that.
Yep. So I think we have one more question, Matt, right before we go.
Crypto/digital assets. do you see crypto/digital assets as having more influence or less influence on the gaming industry? More, less, neutral? I don't know.
How do our results look, Matt?
Yeah, I'm waiting for it. 85% more. Not surprising.
Yeah, so we've heard that a lot, in terms of responses, and it's been kind of intertwined here in a lot of this conversation. More to, it's like what you all have noted is really, the lines getting blurred between that and morphing into a lot of digital crypto is what we're seeing also with a lot of our gaming companies. Anthony, Michael, what are your guys' thoughts there? Where do you see it now versus where do you kind of see it going, and how do you see digital crypto blockchain having an influence on the industry?
I think it's going to have a massive influence, particularly on business models, which will eventually affect the way that games are designed to be built properly around the digital economy, whether it's play to earn or just marketplaces. There's a bunch of different iterations of what we'll see. I think that the reason we're seeing such a big influx of interest right now is because gaming has been the most obvious utility for any sort of tokens, whether they be NFTs or crypto, anything like that. There's just very obvious use cases for them in gaming. So buying an NFT doesn't just have to be hanging the wall art on the game. It's almost like pre-ordering a special edition these days, on top of the cosmetic rarity and on top of the utility of specific land that you'll have in the game that you can actually monetize. Right. So there's just a bunch of different layers to how crypto and blockchain just marry very well with gameplay inherently. And that utility, I think, is what's going to continue to drive adoption of it, which will inevitably influence how games are built and designed around maximizing engagement in these economies.
Yeah, I see for one kind of usability improving a lot. I mean, some of the NFT games today are, you really need to be dedicated to get into the game and playing it and so on. So that's going to get much easier over time. And there's going to also be a migration to maybe for some of them away from Ethereum, kind of the whole like Ethereum gas. It's very expensive, or it can be kind of the cost to transfer money in and out. It's called Ethereum gas as an example, fluctuates sometimes a lot, and it can be a very meaningful amount of money to just get money into the game. And at the same time, to create NFTs and certain blockchain is still pretty expensive and requires a lot of power. And there's a whole slew of new kind of blockchains that are much more efficient, faster, cheaper. So I think we're just really at the very beginning of this whole NFT world, and it's going to be, my guess, it's going to be very volatile over the next 2 or 3 years, before it's really going to take off.
Mm-hmm. And then what sort of considerations do you have for companies that are looking to play in the blockchain space, and looking to monetize that?
In terms of
Anthony, I was just going to throw it to you, Anthony, in a way. I think Anthony's, comment early on about how do you ensure it's a sustainable economy, I think is kind of top of mind.
Yeah, and we're seeing tools that are surfacing for building out and simulating your economy, which I think will be paramount in being able to build out a balanced one that sustains over time. But the companies, to go back to Michael's point about froth earlier, the companies are raising so quickly, literally in the span of a week or two. We're heavily relying at this point on the content side, on the quality of the team, previous experience in building games, and then the game itself. We're seeing a lot of people entering the space because they feel like it's a money grab. They see the opportunity with tokens, and we're seeing teams that are comprised entirely of bankers looking to make a game, and that's not exactly the DNA that we typically look for in a game dev studio. And so, I think team and the quality of the experience really are driving what we're looking for at the moment. And that's where it just comes in handy being so endemic to the gaming space. We've all been gamers our entire lives on top of spending our entire careers in gaming. So that expertise really helps us sift through the types of deals that we're looking at and being able to figure out who might be winners. And we don't know, right? To Michael's other point, there's going to be a lot of volatility. And so we're just, it's seed stage risk, just like any other industry. It's just the potential outcomes are significant at this point for blockchain gaming.
Any other thoughts there, Michael, in terms of just recommendations or, thoughts to consider there?
Yeah, no, nothing else comes to mind.
Okay, no, it's good. So I think one of the things I also wanted to ask you guys too, and kind of your different roles, because you guys provide a lot of unique perspective here. What are some of the key KPIs that you guys utilize in your current roles to kind of evaluate your jobs and the companies you're working with or your own company? And let's start with Michael on this one.
Well, so in my role for a banker,
Right.
yeah. Well, so we do it probably do much more M&A deals than financing advisory deals, and just the way we are structured, kind of likelihood of close is really the top one, assessing any new opportunity, and that has to do with both, just a gut feeling about the company. Second, are there buyers at the table? And if so, what's the stage there? But also, just as important, if not even more, what is kind of the seller's expectations? We often run into companies and say, we have some people at the table and really would like to sell, but then their expectations are way above what we believe we could get. So that's, then we rank them very low, but that's probably the top one we focus on.
Okay. Anthony, what about you?
For us in VC, we're looking at our net IRR. So, we want to see how quickly we're returning capital and at what pace and size to our LPs, a lot of which are strategic. So, we're trying to provide value back to them that is capital, not just in the deal flow that we give them. And Griffin's performed very well on that front. We're lucky enough to be the top performing VC fund, I think, out of 2018 to 2020 with our first fund in terms of net IRR. So been sticking to that as our focus point. I think it's been very important. And our companies heavily depends on the type of company that we're looking at. If it's a platform versus a mobile game studio versus a PC company, very different metrics that we typically look for in them. But a lot of it still boils down at its bare bones into the flow of revenue, obviously like lifetime value versus cost to acquire. Retention numbers are very important and differ from even genre within gaming. Just indicators that the company is healthy and ready for growth so that we can fund that growth.
Okay. And
yeah, I mean, early on, we talk a lot about the input metrics because we were a growth company kind of pre-revenue. So it was all about growing our base of creators, players, audience reach, engagement hours, number of views, all those things. Still use those as a drumbeat. Obviously, we have the financial metrics. Because of our stage, what people care about most is revenue, rather than like a path to break even, and wanting to see us continually reinvesting into the platform. So we don't get a lot of pressure right now on net loss. Our margins hold up around 40-45%, so they've stayed fairly strong. And share price, obviously, even though it's not completely controllable, it's an important metric that we do look at. Where we're kind of moving into a company is now starting to think a little bit more about efficiency. So, whether that's things like OpEx and revenue per employee, fill rates, our CPMs, percent of repeat deals with advertisers. A good example is in 3Q, about 70% of our ad deals were repeat buyers, and our average deal size was about 250K, and a year earlier was about 50K. So can we prove we can take more and more of a share of creator, of advertiser wallets? And emerging now as well is because we have a creator economy thread, how well are our creators doing? What is the average payout for those creators, and how have we created something compelling enough to have them join our platform, use our tools, and help us further monetize the content that they generate. So we look at a pretty balanced scorecard at this stage of the game, but I think we're going to start to see us starting to have to prove that, we see sustainable cash flow positive in our horizon.
Right. So we're running up against our time. I want to give our guests a chance and opportunity to ask any questions. I've gone through a couple of them that have popped up here, but if you have any questions, please feel free to chime in on the chat or the Q&A, and we're happy to ask those questions. One that popped up that would be good for you, and I think, is how do you balance the need to monetize and continue to grow, as you're kind of saying, shareholder value, without upsetting your base, your core, the people that actually are using the platform? How does that balance kind of play into your daily routine?
I mean, again, that's kind of the nice part about, first of all, we became a bit of a meme stock, which was great. It put a lot of attention on our stock. We have a lot of Reddit followers, and so we have a heavy retail base. So these are people who maybe have 1,000 shares in the company or 5,000. And so when we do our quarterly earnings call, we talk to them the same way we talk to institutionals. And so we talk a lot openly about the ways that while we could throw an ad unit across, we'll eclipse 10 billion views this year. We would never throw an ad unit against every one of those. It would ruin the experience for the players. But equally, the way that we're able to create these tools and empower creators is through this ad economy. So because we focus so much on the creator empowerment side, I think we get credit for being very sensitive to how we're helping them build their audiences and finding that right balance with not really having our reason for being that we're here for advertisers, but that is how we make money. And Facebook isn't there for advertisers, but that is how they make money too. But we have to explain that every quarter in a public transcript. Mm-hmm. And that is another really good process, because not a lot of time can get away from you when it's time to write that script again. And to have that hard conversation about that balance we're trying to strike. I was surprised our last earnings call, we had about 30 Super League employees listen to the call, which I thought that's pretty good. Mm-hmm. Like that they're interested now in learning more about the public market. We also had a pretty sizable amount of retail shareholders. And they had their own Reddit lounge, and they were drinking every time I said the metaverse, and they're engaged, and it's kind of fun to be able to talk to them so openly.
Right. Let's go around the room and let's close it out with final thoughts. I'll start with Michael. What are your thoughts, considerations on, or just reminders you want to share with the group, with our participants?
Well, anybody as I mentioned before, it's been an amazing year. Activity is still very, very hot. And if you're considering both raising some money or exploring an M&A deal, assuming you're somewhat at size, I mean, now is probably the time to do it. Historically, it always came in waves. Mm-hmm. And this has been a very, very strong year. I expect next year to be also very strong, but it's not going to last forever, I think. So something to consider.
Okay, good. Anthony, what about you? Final thoughts?
Sorry, I'm lagging a little bit here. I've had some home internet issues that have been a blast. I think you guys can see me fine, which is really interesting. And then the download is ruined. So if you see me making faces, it's because it's frozen on my end, but you guys can see me just fine. Anyway, so I'll just go on as if it's okay. Yeah, I think echoing Michael's thoughts, this is a great time to raise. Would definitely approach the folks that you feel like are the right investors for you if you're looking to raise. I think Ann makes a great point that raising when you don't need cash can sometimes be fortuitous, not just for having the additional runway and the ability to maybe pursue some things that you had on the back burner in terms of your plans, but also to get strategic investors involved, whether it's strategic VCs like Griffin or actual strategic investors that can provide additional value beyond the capital. So would highly encourage people to take advantage of the market right now. And then I'd say moving forward, just be open to the shifting winds we see in business models and see what plays out. I'm definitely not going to recommend diving headfirst into blockchain if you're not comfortable with it, but keep your eye on it, because it'll be interesting to see what happens.
Yep, thanks. And we'll let you close it out.
Yeah, just there's a lot of different ways to raise money. I'm learning every day. So, you know, whether it's through strategic public markets, traditional VC, you know, I just encourage you to kind of think more broadly about the different ways that you can invest in your ideas.
Great. Well, I just want to thank everybody. Appreciate all your time and effort and sharing your thoughts. I a lot. I always take at least 2 or 3 pages full of notes. I learn a lot from you all too in my role and responsibility. So thank you again very much. Thanks to everyone, and we appreciate everybody who attended. Thank you.
Thank you.
Thank you.
Thank you.